Ray Dalio has been very vocal in recent months about how investors should be thinking about China as a potential opportunity and potential risk. I did a video previously analysing his recent LinkedIn article, which was aimed at the recent moves from the CCP and how these should be interpreted, and how actually they've been misinterpreted by some investors and more specifically the media. So go ahead and watch that video for more context on how Ray Dalio thinks about China and the risks involved. But more recently, he's done an interview with Bloomberg in which China again was the topic of conversation, and he rallied home some important truths about how to invest in China, which I feel can be applied to not just China but almost all emerging markets and even some developing regions of established markets if we take out the political aspects. So whether you're invested in China or not, or maybe even deciding whether the current depressed prices may warrant a consideration, this will likely be beneficial to you. Now, we're going to listen briefly to what Ray Dalio had to say about China and about investing in the current climate, and then evaluate how this can be applied to our own investing strategy. And for reference, I'm going to be breaking this down into two parts. So the first is China's internal growth and prosperity strategy and how we should be interpreting this. And then secondly, how to invest in China based off Ray Dalio's advice to us, someone who's very well versed in the area, in the matter, and has developed a good track record of investing in China. So let's jump straight into what he had to say about China.
Let's go to China now. It's so much in the news. I wanted to wait, but I think we've just got to get to China right now. This is a new Beijing. Is it a return to an old Beijing that you and I knew when you were buying Northeast Air? Or do you envision a Beijing that's moving to a new territory?
Well, you have daughter and son-in-law in Shanghai, and so we get
We're living it in real time.
We're living in real time. And the more you have contact, I think the more you understand it. I don't think it's well understood. For a long time, the question is, how can communism and capitalism coexist? That's the riddle you have to answer, and he had to answer it a while ago. And what do these people want at the top? And what the answer to that riddle was told also by Deng Xiaoping when he was asked. He said, it's glorious to be rich. And then they asked about capitalism, and he says, it doesn't matter if it's a black cat or a white cat, just as long as it catches mice. And so the idea is producing wealth. And so capitalism, yes, but the redistribution. Okay, so we have four things that are really going on in China, if you understand their intent. Common prosperity is the word now, okay? And it has been the objective to raise money and then to broaden the base of that, okay? Right. That's common prosperity. So if you look at their tax rates, they're lower than the United States. If you look at the measures of almost capitalism, they have as much capitalism or more capitalism, much more so than Europe, for example. And now they're in a prospect to broaden that. So I think there's a tendency, and an understandable tendency, to think because they are Maoist and communist that they're going to go back to that kind of a thing. And they're not. Deng Xiaoping, Xi Jinping, just, for example, introduced the newest stock market in Beijing. He made a point of being the one who introduced the market in Beijing to the small and medium-sized enterprises. They know that it catches mice. And so the issue is that the capitalist is not in control. The issue is that there's a system for the whole system, and then what they want to do is make sure that it's not a capitalist-driven system. So, and then there's data control, and then you have to understand there's micromanagement. It's like the kids, there's a top-down versus bottom-up. Whether you like it or not, it's what it is.
How can our listeners and our viewers...
So in summary for this part, I'd say Ray Dalio thinks China will continue to aim increasing its wealth in the ways which have worked for them over the past 2 decades. Understandably, this new form of capitalism, being controlled top-down capitalism, is alien to most Western countries and people within it. Actually, it's alien to anyone but China because no one's gone through this system before. But one must appreciate that these ways of working have managed to grow their economy by over 11% compounded annually over the trailing 20-year period, where the global economy has grown at around 2 to 3%. So it works. And they also relinquished 700 million of their population out of poverty and raised GDP per capita from under $1,000 to over $8,000 today. And you can see, though, although the GDP per capita has risen significantly and purchasing power has gone up significantly, it's nowhere near the amount of some of the developed economies today, and still wouldn't be enough to buy a new iPhone without using up 20% of your annual purchasing power. Meaning that although there's no guarantee China's economy will continue to prosper at the rate in which it has previously, the bottom line is that the story seems far from finished, and it definitely is far from finished. And China's publicly disclosed goal of common prosperity is also far from their current reach. So why would they throw the towel in now and change their ways of working to the detriment of wealth creation, which is their absolute target? Moving on to how we should invest in China. Let's listen to Ray Dalio's short and sweet advice on how we should think about opening positions or being an investor in the Chinese market.
Well, I think very simply, you have to decide whether the rules and the place is a place that you're comfortable with. They will set the rules, and you go in there and you decide if you're going to be part of that as a good citizen or you're not. And then, but you don't jump in and out. In other words, China's a strategic play. You're not going to jump in and out. And the amount that you're in should be that which you're comfortable with. It's not smart to sell on the break or buy. It's a strategic play. Most investors are very overweight in the United States or other places. Diversification. There's a competition, a big competition, a war of sorts going on in technology and so on. The diversification, put the amount and the exposure that you want to have there, because you have to have places on some money on two chips, because there are risks in the United States too.
If President Xi read Principles, what chapter would you want him to read? What does he need to know about Dalio Principles?
Whether you like it or not, we are a bottom-up individualist. It's built around individualists.
Right.
And it's built, I think.
You're the example.
And the individuals, and bring immigrants to the United States, and that the power of the individual. In China, it is the top-down, and it is an extended family. One of the leaders said to me, for example, it's like a strict parent. And so when we deal with things like video games, do you want your kids to watch video games? In the United States, we would say that's a parental decision. Generally speaking, it wouldn't be the state to make that. They would say it's terrible what's going on, and the state is going to mandate it. So that there are those two approaches, and I would say that the understanding the relative merits and understanding really how we can get along. I wish that yes, Chinese understood Americans better and Americans understood Chinese better.
I want to bring it back to not so much.
Now, as a summary on this part, I think Ray Dalio, being macro and event-driven investor, is telling us that China has to be a long-term strategic play, and that long-term play is centered around being part of the soon-to-be largest economy in the world. It has the potential to pay off very kindly in the long term because of these economic trends. But on the flip side, it also provides significant short-term investment risk, which is why he said you can't jump in and out. You need to always invest with a bigger picture in mind. Just look at my Alibaba position as a prime example. It's down 30% from what most people thought was a ridiculously low price at the time. But for me, this is something that should be applied to all markets today, not just China. With current prices being where they are and interest rates being where they are as well, inevitably having to come up sooner rather than later, I'd say having a short-term or even medium-term outlook on stocks, maybe 1 to 2 years, is riskier than it's ever been before, or at least riskier than it's been in recent years. And prices could drop significantly from where they are today, and not much argument be made about it being unjustified. On the flip side to that, we've seen good businesses in recent years, trade sideways for 3, even 4 years sometimes, just because the price 3-4 years ago was so high that even with the moves up in their fundamentals, it didn't quite justify an increase in the price. So if you've got a short-term horizon, you need to be aware of that more than anyone else. So for China, that ship has probably sailed. Prices are already depressed, but there's nothing to say prices won't go lower than where they are today. In a market where stock prices move on the latest news and there's fear and uncertainty flooding the market, the short-term investor is playing with the odds heavily against them. And In the long term, regardless of current sentiment, stocks tend to follow the underlying fundamentals of businesses. So the bottom line here for me being that make sure when you invest you have a clear strategy and thesis in mind, and that both are aimed at the long term. And if you do both of those things, you will be making your job a whole lot easier and probably be increasing your chances of making a fair return. And so they're the two key talking points for me from this interview and what I've taken away from it, both from a perspective of understanding China's internal strategy and also thinking about how we should develop our strategy for investing in China. I will just highlight we should be aware that Ray Dalio is coming from a perspective of someone who is bullish on China, and he has skin in the game and owns a basket of Chinese companies through his hedge fund Bridgewater. So take that as you wish. Just because sometimes these smart people and super investors have a strong opinion on something and are vocal about it, it doesn't necessarily make them right or mean they're talking absolute facts. So always do your own research and use this information as a piece of research and analysis if you like, or even discard it as you wish. It's completely up to you. But I just wanted to give that disclaimer. But that's going to be all for this video. Just quickly, I'll leave a link down below to the Patreon where you can check out all of the benefits to joining and supporting the channel. You'll also get access to all the exclusive analysis I've done, my portfolio of stocks, and the investing Discord community. And then just lastly, I'd appreciate if you could leave a like if you enjoyed the video, and then subscribe to the channel if you are new around here. Leave a comment down below with all of your thoughts and if Ray Dalio is right on the current China situation or not. But apart from all of that, thank you all for watching. I look forward to seeing you in the next one. Cheers.